Welcome everyone. Thank you for joining us today for our FinTalks webinar series. We're just, people are entering the room, but just to let you know, we have our speakers with us, and I'd just like to introduce myself and them as well. First of all, just a little bit about the webinar. So today will be approximately a 45-minute session discussion, to then which will open it up to Q&A. If you look in your tab, you'll find the Q&A box. If you have any questions, please go ahead and submit them in the Q&A box. And if we can't get to them today, please also send us an email on the registered link that you registered with, and we can also get back to you then. So let me begin a little bit by telling you a little about the Fintech Consortium. We're a Fintech ecosystem builder with hubs in Jordan and Singapore, as well as the United States. We collaborate with various market players, which include governmental bodies, financial institutions, corporates, investors, and innovators, those who believe that technology can bring added value to the financial industry. So today's topic actually is, I think my speakers can come up, Dr. Ali and Dr. James and Lars. This session is called Empowering Impact and Sustainability with FinTech. And this webinar will discuss how FinTech can amplify social impact, sustainability, and social entrepreneurship. It will highlight the current global trends about impact investing, sustainable finance, ESG, and related themes to explore how financial and other technologies are helping accelerate a digitally empowered sustainable revolution. Welcome, everyone. My name is Susie Zira, and I'm the VP of Fintech Consortium, and I'm also the head of communications and events at Bahrain Fintech Bay. I'm super thrilled to have with me today Dr. Ali Adnan Ibrahim, who is the chairman at the Global Islamic and Sustainable Fintech Center. Dr. Ibrahim is Global Head of Sustainability and Social Responsibility at the Al Baraka Banking Group in Bahrain, which is the world's largest Islamic banking network. He's also an active member of numerous WF communities. He's also the chair of the Sustainable Development Committee of the Bahrain Association of Banks that examines and explores various ways in which the banking sector can contribute to the continued sustainable development in Bahrain. He chairs the Global Islamic and Sustainable Fintech Center here at Bahrain Fintech Bay. We also have Dr. James Gifford, who is the head of impact advisory at Credit Suisse. He works with the bank's clients and advisors to mobilize capital into impact investing. He also teaches a program at the Harvard Kennedy School and the University of Zurich on impact investing for the next generation of ultra high net worth family members. He was a founding executive director of the UN Principles for Responsible Investment and led the organization from inception till 2013. Welcome, Dr. James. And also we have Lars Johansson. He is the founder of Den Social Capital Fund. I hope I said that right, which is a Scandinavian impact investment fund with investment fund-based products improving opportunities for marginalized groups in society. He's also managing director of its private equity fund. Lars is formerly director of lending at the Scandinavian think tank Monday Morning and development director of Index, the world's largest award, a design award, of which he has also been a finalist. Lars has served on government committees and company boards and advisory boards on sustainable development in Denmark and internationally. Welcome, gentlemen. We are absolutely thrilled to have you here today.
Thank you.
Thank you.
Dr. Ali, let's start with you. Can you tell us a little bit more about the Global Islamic and Sustainability Center in Bahrain?
Sure. The center was established to explore the impact intersection that sits right in the middle of the fintech on one side, sustainability, and banking and Islamic banking. So, I think it would be really helpful to see why the GISFC, or Global Islamic and Sustainable Fintech Center, was established. The background is very simple. The technology continues to transform our lives in multiple ways. It has transformed the way we commute. It has transformed the way we communicate. It is changing healthcare. It is changing almost every aspect of our life, our social interactions. So the question then is it changing how we impact on our society? And that question is very important because in the last 10 to 12 years, we have seen the rise of impact investing, like before from the social responsible investing, ethical investing, and impact investing has been there, but in the last 10 to 12 years, it has really surged. And with the technology, it is really getting empowered more and more. And it also looks like that the new form and the new shape of social entrepreneurship is basically impact entrepreneurship. And the only difference and the differentiator looks to be the technology. And that's what our amazing speakers are going to help us see what is happening in that space. And I think, it's important to see fintech has been an amazing innovation force in the finance industry and also in the technology, and it has already done wonders in financial inclusion. And then, as we are going to talk about shortly on microfinance, how it has brought in millions, if not billions, into the banking system, into the financial services sector. The unbankables who were not absolutely able to access the financial markets before, and now how they are able to invest and get financing from the banks. But the journey needs to continue, and that's where the center was established to see how the empowerment of fintech could be combined with the revolutionary force of sustainability and technology, and at the same time the finance, because finance industry for the last 500 years, it's one of the most sophisticated industry in the world, and it has done wonders in efficiency. So how can we combine all of that to reach to the bottom of the pyramid, where efficiency is needed the most? Give you an example. We have young population in the world. Almost 1/3 of the global population is young and is tech savvy. And in the Arab world alone, we have 100 million people who are up to age of 25, and they're all tech savvy. But on the other hand, we see almost 46 million internally displaced people in the world, and 27 million people who are refugees. There is a huge humanitarian crisis, and how technology and fintech and sustainability is going to help on that. So I think the center, and that's where today's event is, to try and collaborate with stakeholders to see how we can continue on this journey. So maybe I think it's time for us to bring in Dr. James to say a few words about what impact investing is. Impact is meant and defined by different people in a different way. What is this movement of impact investing? Where is it going, and how it is all started? And we know that you have pioneered something which is called UNPRI. We'll come to that. And UNPRI is now over $70 trillion worth of asset managers are using that. That must be an amazing impact that you've already had. So please tell us more about this journey, and also about what is impact investing.
Thanks, Ali. So impact investing is really a subset of the broader sustainable investing spectrum. And sustainable investing in general used to be called socially responsible investing or ethical investing back in the 90s. Has a very long history, right back to the 1700s, when the Wesleyans and the Quakers refused to invest in slave ships. And it has had a very interesting history right through to weapons exclusions and alcohol exclusions. Then it really grew a lot in the 1970s with the apartheid campaigns, divestment in South Africa, through to climate change in the late 90s. And since then, it has really been growing very strongly. So sustainable investing, broadly described, is investing a lot where you take into account environmental, social, governance, impact, sustainability factors into your investment process alongside financial returns. Now, impact investing is a term that emerged in around 2007, and it was coined by the Rockefeller Foundation, who recognized that much of the sustainable or socially responsible investment sector was investing in public equities. And if, for example, I buy your stocks in Unilever or another listed company, it's very difficult to demonstrate that that investment in itself made a difference. Now, of course, if everybody did that, it may well make a difference. But the Rockefeller Foundation had very specific impact goals. And they said, we want to focus on that subset of the sustainable ESG spectrum, which can actually demonstrate that your money is making a measurable difference. Now, sustainable investing certainly makes a difference in the big scheme of things, but in terms of your investment and measuring that impact, that really can only be evidenced in private markets. And there is an exception which I can talk about in terms of shareholder engagement and activism in public markets. But by and large, impact investing, as it was coined and has grown since 2007, is primarily focused on private markets, venture capital, private equity, unlisted green real estate, affordable housing, sustainable forestry, these sorts of things, where your money is literally going into a company to grow that company to produce more impactful goods and services. And while the broader sustainable and ESG space has grown tremendously to more than $30 trillion in assets, the impact investing industry, because it is this more private market subset, is still under $1 trillion, depending on whether you include all renewable energy infrastructure. If you do, it would go up to a couple of trillion, but self-declared impact assets are around about 700 billion now, but that has grown almost doubling every year for the last 5 years. Oh, Ali, I think you're on mute.
Dr. Ali.
Sorry, apologies. So I definitely want to come back to you on UNPRI, but just to continue with this the thread of thought, how much of the current market size that you mentioned, less than $1 trillion, it has gone into Asia or non-OECD markets, because traditionally it was predominantly OECD market. And what is making it, go towards Asia, or more growths we are able to see in Asia? What are the numbers there?
Yeah, I don't have the exact numbers in terms of the breakdown of that 700 billion, but I would guess that a significant proportion is in developing countries, because that includes a lot of microfinance and development institutions, and a lot of impact investing has been focused on developing countries. But I think it's also important, just to bring it around to fintech, is that microfinance was one of the earlier types of impact investment, because microfinance is explicitly seeking to have impact with the world's poorest communities. And certainly Credit Suisse was a co-founder of Responsibility, which is one of the most well-known microfinance institutions or fund managers in the world. And microfinance has seen a transition from collecting cash, by hand on motorcycles, to fintech. And we really have seen the emergence of fintech in developing countries overlapping significantly with the microfinance industry and therefore impact investing. That's
amazing. So Lars, it's really a pleasure to have you as well with us. And it's very interesting, the journey that you started in Scandinavia for impact investing. And I'm not sure if you would really like to be called an impact investment banker, but I think with the work that you are doing, you are bringing finance to the sector which needed it the most. How was it? How did you start that in Scandinavia, and what are the core markets, and how you are measuring impact? What is your normal day like in terms of delivering impact?
Well, thank you. And I think interestingly, the journey that we've had in den sociale kapitalfond, which literally means the social capital investment fund in Danish, very much reflects the trends and tendencies that James referred to. Actually, we were inspired. I was fortunate enough in 2003 to meet Muhammad Yunus, then a Grameen Bank at a World Economic Forum event. Hearing him talk about the Grameen Bank and impact investing, social entrepreneurs, thinking, this could be very well needed also in an OECD context, also in a Scandinavian welfare society context, such as that which we have in Denmark, Norway, Sweden, and started thinking about it back then, and started working with promoting social entrepreneurs and so on. Realizing a need for investors focusing on social entrepreneurs to gain both financial and social impact through their investments, to basically lift social return on investment for every dollar, euro, or krona available. And hence started founding den Sociale Kapitalfond, our impact fund, in 2010, together with one of the leading Danish charity foundations. And I think, so you can say we're an example of an inspiration coming from Southeast Asia, moving, to the OECD, in our context, the Scandinavian context, and adapting approaches and ideas to fit a local context, but with the same idea of helping vulnerable persons on the margins of society. So what we do now is that now we have a fund management company, because the market has matured much more since then. But what we have now is a fund management company where we manage a private equity fund that invests in small, medium-sized enterprises in Scandinavia that are particularly good at helping including marginalized persons in society, either through the labor force or through the products and services they have. But we also do so-called social impact bonds, which we might get back to later on. We also run various accelerator programs financed by the savings they bring to both local and national governments through the social impact they have. And we have, several new products in our pipeline, among others, products that are only now, you can say, financially sustainable thanks to fintech and some of the developments that have been made in the fintech sector, bringing down transaction costs and transparency and availability boosting thanks to the new technology. So you can say, I think we're an example of one of an increasing number of practitioners around the world who are moving and going along with the trends that you put on the agenda exactly today.
Yeah, and it's very interesting. You're not only an impact investor today, you also play a great role as an ecosystem builder. You have incubators, accelerator. So what kind of startup innovation that you are seeing? What kind of innovation in the startup space that you see that come and benefit from your ecosystem? And could you give us some examples?
Yeah, I think it's quite widespread. My colleagues have just finished a 2-day boot camp where 30 of the leading Nordic startups were present exactly on this topic, and it varies very much. We are talking everything from sustainable food, urban gardening, fintech inspired companies bringing technology, bringing help and aid to, for instance, disabled people through new platforms. We are talking personal care products, also made smarter and more available. So there's a great variety, you can say. You can say that there are both new platforms providing access to services, and there are new products and services of all kinds. So you can say it varies very much. And I think it reflects the tendency that we see among entrepreneurs and startups in general in these years, that impact is becoming more and more persuasive. I think some of you might know there's a quite, I think, funny HBO series called Silicon Valley. Yeah. Right, some of you may have seen it, right? And I think if you're interested in the work of TISFC, then you probably also might find Silicon Valley funny. And I think I remember from one of the episodes, you have all these startups, including our protagonist from the series, going to a big conference with giving presentations to investors, and then you have everybody giving presentations, even the guys who want to bring out pizza in new ways, going, and that is why we will positively impact people around the world. So there's a very persuasive movement, a pervasive movement around the world right now. Fortunately, I think among startups, especially tech.
Wow, that's amazing. So I'll come back to you on a couple of other thoughts that I have, and let's go back to Dr. James. As most of our participants who I thank for joining are young people, and most of them could be young startups, and the ones who are going to watch it offline, they're also going to be predominantly interested in or in active startup space already. So I'm a big fan of yours and your work. So I know firsthand the inspiring journey that you had. And I would, for the benefit of the audience, I would love for you to kindly share with us the journey, the entrepreneurial journey in the impact space, particularly when you had developed PRI and you were only yourself working with the Secretary General of the UN. How did that work? What was a normal day like? And how did you inspire yourself to think so big? And my thought is to bring some inspirations for all of us from your journey.
Thanks, Ali. So look, back in 2003, I was working for a forestry NGO, and we would ask our members to file shareholder proposals at forestry companies' annual general meetings and ask those companies to do more sustainable forestry practices. And so this got in my head, it's like, wow, imagine if we could get equity holders, and this is before impact investing was a term. I was thinking purely with the listed equities hat. And I was thinking, imagine if we could get listed equities shareholders to build coalitions and actually put pressure on the companies to be more sustainable. And so I did a master's thesis on that topic, and then thought, well, I really want to do a PhD. I want to become an expert in that topic. And so I enrolled in a PhD on how can we make shareholder engagement and activism in listed equities as effective as possible. And I was fascinated by the idea of using the power of capital for good. And so I enrolled in a PhD, but I had 4 months spare. So I went to the UN in Geneva, the UN Environment Programme Finance Initiative, as an intern. And after a couple of months, we were working on a strategy to work out how we could engage more with pension funds. And at the time, the IFC and the World Bank had launched the Equator Principles, which were about project financing in developing countries, putting sustainability and human rights criteria around lending. And I proposed to my boss at the UN at the time, why don't we develop a set of principles around responsible investment and focus it in pension funds, focus it towards pension funds. So I whipped up a proposal, and he hired me in the end of 2003 to help develop this process. And then I sort of coordinated the drafting process where the Secretary General, Kofi Annan at the time, sent out invitations to the world's biggest pension funds and invited them to UN headquarters to come and start the process of drafting these principles. And so in 2005, we spent a whole year, 11 days of meetings with the pension funds to come up with the principles, which then became the Principles for Responsible Investment, UN PRI. And then we launched in 2006, and I became the first employee, and then built up that organization over the subsequent 7 years to the world's largest initiative on sustainable investing. Now, coming back to the reason to mobilize this capital for good, we set up a shareholder engagement collaboration forum. So then investors and shareholders would come to the group of signatories to the principles and say, hey, we would like to do something on overfishing with companies, say retailers, and let's try to encourage a bunch of listed companies that sell fish to source fish from fisheries which are approved by the Marine Stewardship Council. So then these investors would form coalitions and then go and invest, they were already investors. They would then go and engage in a dialogue with the company to encourage those companies to improve. And so that was a really powerful development, I think, in the industry. And now the UNPRI has, I think, 70 trillion in assets, which have signed up to the principles. And it's just, I left after 10 years to the day after joining the UN, and the initiative has gone from strength to strength.
This is fantastic. I think this is a huge impact. And so Lars, you are in your heart, and you are in every day, you are a social entrepreneur, impacting lives every day. So, when you, like 15 years ago, what was it happening within you to inspire you to do this and think about this? And what was that restlessness about social impact? The idea is to, a lot of our young startups, they think about making a social contribution, impacting, but not all of them are able to bring it to an impact initiative. So is it too difficult, or it shouldn't be too difficult? Has it been too difficult for you? So enlighten us with your experience.
So my experience is, I think starting up something is always a lot of hard work, but hopefully it's also a lot of fun. And I've been very lucky that it's been a lot of fun. As knowing James a bit, I also think you probably also had a lot of fun, James, doing all this, right? Frustrations and fun come hand in hand in these kind of processes. But so I have a bit of, because working in finance, I have a bit of an unusual background. I'm actually I don't have a finance degree. I'm educated in political science and Russian, economic and languages. And I don't speak it anymore, unfortunately. It's gone. But I came from international politics, went into media advisory and then design, and then back to media advising, and had an interesting work life, interesting jobs, but always this idea of wanting to contribute more, mixed with social indignation. I'm very fortunate to come from a very fortunate part of the world. Scandinavia is a very lucky place to be born in many ways, very equal, very wealthy societies. But even in Scandinavia, there are many things to trigger social indignation, because there are very large chunks of the population in all the Scandinavian countries who are more or less permanently left on the margins of society. We say that almost 10% of youth in Denmark become disenfranchised from mainstream society. So even though nobody starves, a lot of people are outside and don't get to fulfill their potential and feel a strong sense of belonging. So there's still a lot of work to do. And mix that with a growing realization that I wanted to start up something. I had an entrepreneur in my belly, so to say, which I imagine also many of the members and stakeholders in your organization have. Those things came together. And I had the idea, inspired by, as I said, by Yunus and our work there, that what if instead of trying to make a lot of money and then take a cut of it and donate it to good purposes, which is a very good thing, but what if we could actually directly invest in companies that do good and combine making money and doing good? As I said, it will maybe be more sustainable solutions we help create. The social return on investment per dollar spent is higher, and so on. And then I'm fortunate to have a wife who's very smart, and she's also a social worker, so she has probably pushed me to pursue social impact, and these things came together. So and then, as I said, I don't have a background in finance, but you can learn a lot from studying. And I've also learned, not the least, that from teaming up with experienced people who were willing to take me on as their apprentice live, so to say, learning the ropes by doing the ropes, and of course putting in a lot of hours gets you far. And I hope, you know, at least from my experience, I've learned that is actually quite encouraging, and I hope it can be encouraging to others as well, that you don't have to master every subject when you start up something. If you find good people to help you and are willing to put in the hours.
Thank you, Lars. Thank you. And now coming back to Dr. James, what would be your suggestions for the ecosystem builders in the, let's say, in the Arab world, and also for the young entrepreneurs, how they should align their business thinking? They're very excited about launching a new business venture. At the same time, they may also be thinking about some social causes. What is your advice on how these two could be combined, and any advice on how to make it work?
Yeah, I think it's really important. I think having a mission-driven organization has a huge number of benefits. So even if all you want to do is make money, actually making money through a positive mission can actually be, especially in this day and age, one of the most effective ways to make money. So let me just run through a few reasons why this is the case. The first is you're going to be happier and more motivated if you know that you're not just in something for the money. If you really believe in what you're doing and believe that the business is actually doing good for society, it's going to be innately more inspiring for you. And I can certainly say that about my own career, knowing that I'm part of something bigger than myself that is pushing capital towards justice and sustainability was a very powerful motivator for getting out of bed in the morning. The second one is access to finance. I believe now that impact investing and certainly ESG are amongst the fastest growing sectors in the whole finance sector. I was speaking to a friend of mine who works for a very large fund manager, and the ESG segment is the single fastest growing segment in the entire business. And I can certainly say from a Credit Suisse perspective, we have had tremendous growth in sustainable and impact assets. So I believe that if you are a sustainable and impact business, you can tap into new types of capital and additional capital. Thirdly is talent. Many young people these days want to work in something that's meaningful. You know, gone are the days where the most talent, they just go where the money is. Well, they may do that, but they'll want to go in the sustainability division of the bank. And when I hire, for example, for Credit Suisse, and we put out a job with the word impact investing in the job title, I can tell you we get the best talent on the planet. And certainly the team I work with is an incredibly high caliber team. And so I think you can actually build a much stronger team of mission-driven people who will be much more loyal. And certainly in the funds management industry, sustainable capital is stickier because the clients have more than one reason to be there. So what we've seen in the downturns, whether it be the end of 2018 or more recently, sustainable funds and sustainable strategies have tended to be much more sticky and not have the types of outflows that you've seen from mainstream fund management products. So there's just a few of the reasons why I think mission-driven businesses are really the way of the future.
That's amazing. So Lars, if I could, circle back with you on the earlier part of your discussion on social impact bonds and how technology is transforming the space in social impact. help us see it from your lens. What do you see around and in the larger continental perspective? What are the innovations happening and from the technology and also in the financial side?
So, I mean, overall, I see this and experience the same tendencies that James also described and that you described, Ali. Basically, that impact investment has gone from being seen as something a bit odd in the early days, and you were all you were put in the tree hugger category in the first years, to seen as something exotic, to now being seen as as quite mainstream increasingly. And I'm not talking about ESG here. I'm talking about the more hardcore impact. It's really spreading. Of course, the buzz is always ahead of reality, but the buzz is quite widespread right now. I also see, if you look at the private equity world that I work in, that I see traditional private equity funds rebranding themselves. I see impact investing in private equity labeled private equity 4.0, etc. And I see it for many of the reasons that James described, and which are also core of our investment hypothesis, namely that impact actually in many instances make a lot of commercial sense. And by the way, when you invest, especially in smaller companies in the PE or VC field, you very much invest in humans and the culture they have in their organization. And hence James' point about attracting the best teams and having the best culture by being mission driven are hugely important to success.
Sorry,
so go ahead, James. Yeah.
No, I was just going to say, I mean, another really important point to make is that many of the fastest growing sectors in the economy are impactful by nature.
Yeah.
So
exactly.
Education technology, for example, is booming. And I recently co-wrote a publication called EdTech, Coronavirus and Beyond, which is on the Credit Suisse website. And this just looks at the growth of EdTech since the coronavirus. Now, education technology is clearly an impact sector, and the funds involved in investing and funding and growing the education technology market are impact funds. But it's also highly profitable, and they are growing very fast. Medical diagnostics, telemedicine in developing countries. I mean, it doesn't get much more impactful than telemedicine in developing countries, and yet that is a booming sector. And final point on this, what I see a lot in Asia is really talented young people who are educated in Western countries coming back to countries like Indonesia or India and starting impact type businesses in fintech, in edtech, in this kind of impact technologies, and succeeding and building really great companies that are worth hundreds of millions of dollars and sometimes more than $1 billion.
And then just to add that as an investor, you also, of course, look at trends in the market in the sense of where is supply of capital going. And right now, there's a growing supply of capital in the impact space, which also affects valuations of companies, etc. So there's and that also that moves both, that affects both fund managers' strategies, and portfolio strategies and individual companies, of course. So there's you can say a positive spiral that is starting. And the same, I would say, goes for the listed market, that once you see ESG indexes moving as they do nowadays, that is absolutely an awareness point, and hence later also an action point, I would say, for many companies to move in that direction. So those are some of the overall interesting trends. And then I think in a good sense, developments in fintech are amplifying some of these movements that we see, because when you try to design impact finance products, you do risk having challenges with, for instance, transaction costs, the additional cost that might come from having your services spread to larger segments of society where buying power is not very high. The additional cost coming from finding ways to measure and calculate capitalization on impact in your products and so on. And there fintech can play a role. So for instance, if I look at ourselves in the Entrepreneurship Capital Fund, we are looking at developing loans, for instance, for segments of smaller companies that are than what is relevant for our private equity fund. And we can see that crowd lending platforms could be a good tool there. And when we talk to providers of crowd lending platforms, we can see that putting the impact dimension into the equation can help drive both supply and demand on these platforms. So that is one example. Another example that we see more and more is around the world, I think, or will see more and more, is blockchain. I think blockchain is one of these technologies that first everybody talked about it, then everybody stopped talking about it, and now so many are doing it, right? So it's spreading more and more. And I think blockchain can help, like if you look at products such as social impact bonds, which are basically, in the way we work with them, public-private financing partnerships that you can tailor also for instance, smaller local government projects. One of the challenges about them is that there are quite a few transactions. It's a lawyer's party to work with social impact bond because there are so many contracts and transactions, microtransactions involved. But if you can blockchain them, and you probably can use blockchain as a basis for, then you can ideally lower transaction costs quite a lot and so on. So, and these are just examples. I think financial technologies will help spread this movement more in the future.
Excellent. I have two more questions, but I'll stop for now, just to get some questions from the audience.
So I'm going to start. There's quite a few questions coming up. I think everyone's, for a lot of them saying, this is a great talk. One of our panelists, one of our attendees is asking, Kamran, he's asking, what do you suggest to start to be more engaged? Like, what do you suggest to people who are new to this? I'm guessing this is a young person who is new to this idea of thinking of investing. I directed to all of you. He's basically, he's asking how can you become more engaged in this?
It's a broad question, but I think
it's
two places to start is to look at what are you really passionate about and what are you good at. I always, my experience is that focus helps. There are so many issues I would like to work with and make a positive impact, where I feel somebody has to do something. But I've chosen to work on one specific issue, which is marginalized persons, to begin with in my own part of the world, and maybe someday more broadly. And having that focus has definitely helped channel energy and creativity. And then find out what you're good at. Are you good at building things, analyzing things, helping others, communicating things, etc.? Put those two things together. Maybe you have a starting point.
Absolutely. Thank you. Well, thank you for answering that, Lars. So I've got a question from Naman Aurora. He's asking, you kindly briefly went over this. He said, what is the impact of the COVID pandemic been on sustainable and responsible investing? I think you've pretty much aborted. Maybe they want to hear a little bit more about, how this has impacted what you guys are doing now even more.
Yeah. So the stock price performance of companies of more higher rated ESG companies was better during the downturn. And the theory is that the types of companies that have very high ESG ratings are probably very well run companies, and they're probably more resilient. So environmental, social, and governance factors, E, S, and G, can be seen as a proxy for good management and resilient types of businesses. So I think we've seen in general these types of companies that rate highly do well or do better relatively. And then looking at specific impact sectors, like I mentioned, education, technology, a lot of telemedicine, online, a lot of digital finance. I know there's a microfinance company in Indonesia, which is primarily fintech. And I think it has added a significant number of new clients this year as well. Obviously, there's been a lot of need for debt during this period, which has a negative flip side. But in terms of providing lower cost access to finance, I think fintech microfinance has performed a really important role.
Yeah. Thanks for answering that. So we have Ruwaida Al-Arabi, who's a little bit more onto the same subject, but she says basically what you are discussing is the ultimate dream to everyone. However, we're facing an imbalance between what we want to achieve in our work life and the harsh reality of keeping our life on. Everybody's facing a financial crisis on the personal level while they're trying to improve this dream. How can we support the individuals as well as supporting startups on any level? I guess she's saying the balance of, supporting and also, the financial crisis that they're being. Ruwaida, I hope I am answering asking your question correctly. Maybe you want to, I don't know, Dr. Ali, if you can understand what she means in the question box. Basically, she's like, how can we support startups and survive this financial crisis?
Sure, and I think, the one related theme of this question appears to be that as we have seen from the journey of Lars and Dr. James, then they did not wait for the ecosystem to come. They just started working and the ecosystem developed. And I think maybe, towards the end of this session, maybe both of our speakers could shed some more light on this. Whether the entrepreneur should wait for the ecosystem or should just continue working and, the ecosystem should come by itself. So I think it's a combination of all. So maybe the question that you asked is very, very important. So let's hear what the speakers say.
Yeah, I think it's important to recognize that there's real dignity in every work and every business, every small business and every job that is done with integrity. And that is what brings society forward. And if it's a small business, making pizza and somebody has real pride in that pizza and seeks to use sustainable ingredients and treats their workers well, that is an important contribution to sustainable development. And I think if you can work in developing countries or low-income communities in wealthier countries and empower those people and generate jobs, that's all equally good as running around the United Nations. So I think we need to recognize and acknowledge the dignity in regular work and small businesses.
If I very much agree, and then you can say on a more systemic level, I think it highlights the importance of ecosystems, and it also highlights the importance of ecosystems that acknowledge the entire value chain from idea to investable product, and hence also different kinds of investors and donors are needed. I think we often tend to forget how important it is that not only investors but also donors, charitable organizations, high net worth individuals, and so on, play a hugely important role in getting areas such as impact investing going, and both on a systemic overall level, but also regionally and locally. So specifically, the more you can work with having good donors and sponsors who can help you finance early startup phases, ideas, come with grants, scholarships, and so on in the early stages, the more talented people get a chance to make a stronger impact. And I think that's very, very important to work with.
Absolutely. Dr. Adnan, I think your microphone's on mute. Maybe you want
to... Yeah, I think there was a question from Mr. Stefano. Has that been addressed, or would you like to?
Go ahead.
It's in the chat.
Okay, that's why we can't find it. I think let's address that.
So Mr. Stefano he heads up UNDP in Bahrain, and he's very passionate about SDGs and everything around that, and he's a thought leader himself. So go ahead, Susie.
Yeah, no, so I see. So sorry, Stefano, I saw it was in the chat. So Stefano's asking, would you say that the current crisis, specifically COVID-19 related socioeconomic challenges, presents work and funding opportunities and a trend in that direction? So he's saying, if I'll repeat it again, would you say that the current crisis, meaning the one that we're in and the challenges we have, presents work and funding opportunities and a trend in that direction? Does that make sense?
Yeah, just a thought on that. I mean, the first thing is that there's really, overall, this is not a good situation. And, almost every sector is suffering, and there is tremendous pain and loss of life and loss of livelihoods and loss of jobs. And I think, we have to acknowledge that. But whenever you have disruption, there are always opportunities. And I'm not talking about tech disruption here. I'm talking about real societal dislocation and economic disaster. Now, yes, there are opportunities, and there will be some businesses that will rise out of the ashes of this crisis. And I think education technology is one of them. You cannot put that back in the box. We have seen literally between 1 and 2 billion children experiment with ed tech for the first time, and literally tens of millions of teachers being forced to experiment with ed tech for the first time. So this is not going away. I think a huge transition to everything online, whether it be government provision of services, whether it be work, teleconferencing and calls like this one, or whether it be online shopping, all of that has been accelerated dramatically. And so absolutely, yes, there are opportunities in the digitization and the pullback from face-to-face, but that comes at a very great cost to some sectors, whether it be tourism or hospitality, that have just been hit really hard, and it'll be difficult to see them coming back as strongly, until we have a vaccine.
I mean, I think that I've learned a lot. Personally, I've learned a lot, and I hope you've all enjoyed today's session. It's amazing to see how fintech can amplify social impact and social entrepreneurship and sustainability. And basically, Dr. Ali, I don't know if you have any final words for everyone, but I really, it was a great eye opener for me and for many of the people here. Thank you for joining us. Dr. Ali, do you have any final words you would like to share with the speakers as well?
Yeah, I think I would rather like the final words from our illustrious speakers. And I think particularly on the most of the developing countries, I think this has been echoed in the chat, that most of the developing countries, they definitely are way far from having even a semblance of an ecosystem. So the structures like B Corp and the structures of corporate charity, they don't exist there. And the questions for the passionate advocates of sustainability and the social entrepreneurs who day in, day out, they just want to serve, they just want to contribute, they just want to impact. What would you like to share with them? Any thoughts that, their journey is very important. They definitely, there would be times that they would get disappointed. There would be times that they would say, there is no fun in doing this anymore. Let's stop this, and maybe there are better times ahead. So how would you encourage them that this is not the time to stop this is the time to actually, even running even faster.
Yeah, look, I think there's an important aspect, which is focusing on something meaningful that is bigger than yourself. And I think if it's all about you, then I think it's easier to lose motivation. If you realize what you're doing has a meaning in the world, for other people, for the environment, or whatever it might be, I think that is one of the keys to a flourishing life. And it doesn't really matter. It's whatever you can engage with 100% of your brain. Where do you find your flow? And I think if you can find that flow in whatever activity, and that activity is meaningful and it's bigger than just yourself, then that can be a really helpful sort of light to follow.
Amazing, amazing. Lars, parting words from you, please.
If I should say, if I should give two pieces of advice, it would be find a mentor and don't be afraid to steal. Meaning that from my personal experience, I was very fortunate to find somebody who had done something that I aspired to, or something similar. And they were kind enough to share, now and then share some of their wisdom with me. I benefited a lot from talking to Jacqueline Novogratz from the Acumen Fund, and also the late Pamela Hartigan from Oxford University, who unlike me, really knew what they were doing, but were kind enough to share lessons learned. And the other, when I say don't be afraid to steal, that's a Scandinavian irony, but the point is that there's so much going on around the world these days. Don't be afraid to look at what others have been doing in other parts of the world, in other countries, in other regions, and think about how you can adapt, and use that for the benefit of your own community. I'm myself somebody who in the early days was very inspired by Muhammad Yunus in Bangladesh, and there's quite a distance from Bangladesh to Denmark. But don't be afraid, and instead be inspired by all the many things that goes on around the world, and learn, piggyback, take ideas, make them your own, and use them for good in your own community.
Very well put. Thank you so very much.
Thank you, all of you, for joining us today. Dr. Ali, Lars, Dr. James, really enjoyed your time. Again, if any of you have many more questions, I know there are some more, please just contact us at info@Bahrain, on the email that you had when you registered, and then we will get back to you. I'll get in touch to make sure Dr. Ali or myself or any of the people here can answer that for you. Thank you, and have a lovely evening, morning, and night to some of you out there. Thank you, gentlemen.
Thank you, everyone.
Thank you.
And thank you, Dr. James and Lars, and Susie, of course. Thank you so much.
Bye-bye.